than just business news, we're news for business people.
Hello and welcome, I'm Agam Akil and you're watching What You Miss on Bloomberg Quint Live. Let's look at the headlines. The Sensex closes above 34,000 for the very first time, while the Nifty ends above 10,500. Metal, telecom and pharma stocks lead the chart. And Anil Ambani unveils a new debt recast plan for Reliance Communications. The company will exit its strategic debt restructuring plan with a zero debt write-off to lenders. Also plans to bring down its debt to 6,000 crore rupees by March next year via a sale of assets, and part of it is in the wireless business. And IOC and BPCL express interest in buying the government's stake in Gas Authority of India. However, GAIL is hoping to merge with ONGC. And Vijay Rupani is sworn in as Gujarat Chief Minister once again. He is expected to hold his first cabinet meeting tomorrow. On a day when flattish moves dominated benchmark indices, intense buying in the final hour made the market close on a record high note. And the Sensex ended above 34,000, while the Nifty closed well above 10,500. We have Neeraj Shah standing by to give us all the details and take us through all the market action on the last street. Neeraj?
Well, it was a late hour surge that led the index to close in the green. So about 1/3% for the Nifty, about 1/4% for the Sensex. But the broader markets were doing well for most part of the trading day. So they ended well and they did well for most part of the trading day, which is why we had positive market breadth as well. Late hour cheer for all telcos. And some banks as well. So Yes Bank about a couple of percentage points, Sun Pharma a couple of percentage points. I haven't included Bharti Airtel here, but Bharti, Reliance, Arcom, etc. all did well. Tata Steel and SAIL did very well as well. The metal stocks were up and about. But I think the late hour surge happened because of the stock of the day, and that has to be Reliance Communication. Big move there. They've achieved the debt resolution, at least they've announced that. 32% move on Reliance Communication, and that led to a surge at about the same time in the other telcos, in the banking stocks as well, select banking stocks. The Nifty Bank, which was down about 1/3%, ended the day higher. So all of that, it is all well that ends well, and we close in at new highs. The broader end of the spectrum, as I said, a clutch of stocks were doing very well today. Navin Fluorine, HCL Info, both of these names, I mean, I'm just choosing two out of the many that did well, but these two strong moves, strong volumes as well. There were losers, the likes of TV Today, I think Transmission, having had a fabulous move the last few days, but in today's session corrected a bit. But by and large, if you look at it, the broader markets activity very brisk. Telcos right in the thick of things in the last half an hour, and because of that Arcom news that came out, I think a late hour surge in the Nifty Bank and thereby the markets too. So all in all, fresh highs again in expiry week. Let's just see if volatility picks up and we can actually inch higher closer to Thursday, which is the Nifty expiry day.
Well, thanks for that, Neeraj. And speaking of Reliance Communications, shares of the company jumped towards the close of the day today after the company announced a new debt recast plan. Chairman Anil Ambani charted out a new plan that will see the company exit the strategic debt restructuring plan and substantially bring down its debt. Let's listen in to Anil Ambani's outlining the rationale for the new recast.
Reliance Communications exiting from the strategic debt restructuring framework, number one. Number two, it involves no conversion of any equity to lenders, fully protecting all shareholders. And number three, and most important, is zero write-off to all lenders. We expect a full and financial closure of all the transactions for all the modules that we are running to be completed between January and March 2018, which is the next 3 months. The overall debt for Reliance Communication will be below 6,000 crores. I think the driving force for the banks was A, no write-off, 2, substantial amount of prepayment, 3, practically reducing their exposure in the telecom business to near zero, the wireless business to absolutely zero. So that was the comforting factor, and we aligned all the lenders together to get it done. In the packages that we've got for the wireless business in terms of the monetization, there are a large number of bidders. First, this is not a liquidation, this is a monetization. 2, we're running a transparent process. 3, bidders are allowed to bid for various packages. And within that, bidders can bid for different, I'm just giving the example of spectrum, they can bid for different frequencies by circle. Yes. So somebody has a gap in something else, somebody's got a gap somewhere else, he can bid in that way. I think that the evaluation committee just runs through the process to saying what maximizes value, number 1. 2, what brings certainty, because this is a cash deal. There is no financing, there is nothing. So what is certainty of execution and what maximizes value? You can have a resolution only when you have clarity that nobody is working at cross purpose. So if somebody is in NCLT and wants to secure his debt, he can't have both. So he's got to choose which direction he wants to really go. If he believes that by going through an IBC process, he will recover more value, he should go down that path. He doesn't need my consent. He doesn't need my approval, correct? And he can go down that path.
And Purva Chitnis gets us the key takeaways from Reliance Communications' new debt recast plan in this report.
Reliance Communication has exited the strategic debt restructuring plan. The company said that post this, the company's debt would come down by 25,000 crore and the new debt on the books would be 6,000 crore. The company is also looking for a strategic partner for further equity infusion to reduce its debt. The company did not reveal who the buyers would be for the assets that they are selling. However, it said that there are multiple players who are interested in these assets. The full and final closure of all these transactions would be between January and March 2018. And the company said that going forward, that their main focus would be on the B2B business and it will be an asset-light model.
And 2 state-run oil marketing companies are keen to buy out the government's stake in GAIL India. The gas utility has other plans, though, where GAIL has written to the oil ministry arguing that it makes more sense to merge with ONGC, according to news agency PTI. So how will the different scenarios pan out? Yatin Mota is here to take us through all the details. Yatin?
Well, if you look at Gas Authority of India, we had the finance minister already talking about the integration of the entire oil marketing as well as the oil and gas PSU companies. We had ONGC, looking at HPCL via the acquisition of the government's holding. Now, what we learned from the PTR report that both IOC and BPCL separately have proposed to acquire government stake in Gas Authority of India to the Oil Ministry. However, it is surprising to note that GAIL, which is Gas Authority of India, has informed the ministry that the strategic fit for GAIL's stake could be ONGC, because ONGC is a gas producer and GAIL is a gas distributor. So it makes more sense for a deal or a transaction with ONGC, which is already into advanced stages of acquiring government stake in HPCL. But IOC and BPCL have submitted the bids. It's up to the government as to how really to approach to this particular transaction, because they have not yet finalized any transaction for GAIL, and the proposal is under consideration. Of course, the government stake in GAIL is worth a little over 45,000 crore rupees, and it will be interesting to watch out for really how really the ONGC HPCL transactions shape up, and then probably whether or not the government and the oil ministry look at divesting their stake in GAIL to oil marketing companies like BPCL and IOC.
Well, thanks for that, Yatin. But staying with ONGC, ONGC Videsh will buy oil wells rather than drill for new reserves to meet its production targets. In an interview with Bloomberg, ONGC Videsh's managing director Narendra Kumar Verma said the short-term production goals can only be achieved through producing assets. ONGC Videsh Limited, the overseas investment unit of state-run Oil and Natural Gas Corporation, spent 2.2 billion last year on the existing Russian project, which raised the production by as much as 4 million tons or 44%. The company still needs to add more than 7 million tons to achieve its target of 20 million tons by 2020. And the company brought a 25% stake in Russia's Vankor projects last year from oil giant Rosneft, lifting its overall output to about 12.8 million tons in the year ended March 31st, from around 8.92 million in the previous year. But moving on, the Modi government had to set an ambitious target of 10,000 kilometers of road construction for FY18, but the pace of the new orders have slowed down considerably. The reason? Land acquisition hurdles. Purva Chitnis is back with us to give us more details in this report.
The pace of the road construction project in the country has slowed down, and it is evident from the number of road kilometers the NHAI has awarded so far. The overall target for NHAI was to award 10,000 kilometers in this financial year, which is below the 15,000 kilometer award target which the NHAI had last year. And the analysts that we spoke to believe that the main reason for this is the land acquisition hurdle. According to the law, it is mandated that up to 90% of the land is first to be acquired, and only then the construction work can begin. So this is why the projects are getting delayed. And one such project in Maharashtra is the Mumbai-Nagpur Expressway. So far what we know is only 40% of the land is acquired, and the work on the project can begin only by April or May next year. So this is eventually going to push the project deadline by 2 to 3 years.
Well, thanks for that, Purva. But moving on, 2017 was largely a washout year for electronics retailers who had to grapple with demonetization and GST hurdles. The only saving grace was the high-end television segment as consumers continued to shift towards better picture and sound quality. Charlene D'Souza gets us a snapshot of the year gone by for electronic retailers.
Indians are definitely buying, in the last year, bought bigger and better televisions that showed pictures which were up to 4 times sharper. This has helped consumer durable retailers to make up for lost demand due to demonetization and GST. Along with smartphones, Vijay Sales and Chroma said that 4K and OLED flat panel TVs have been the outliers in an otherwise washout year. Smartphone sales drove volume for retailers, which was driven by Chinese manufacturers selling handsets in the world's second largest market through brick and mortar stores after launching exclusively online, according to Ritesh Ghoshal, Chief Marketing Officer of Chroma. TVs drove Chroma's value growth by 15%, while volumes rose by 6% due to smartphones, which roared on models like OnePlus 5T, Samsung Note 8, Xiaomi Redmi series, Vivo V7 and 7 Plus. Now, Vijay Sales attributed the falling prices of high-end panels for growing demand. However, he also said that even a single-digit growth is not bad today. Appliance makers like Godrej and Whirlpool both said that they witnessed a slowdown this year due to demonetization and GST, and said that Godrej and Boy said that the growth rate has slowed down to 11 to 12% from 15% in the previous year. Samsung India said that consumers are migrating to larger screens even in smaller towns, and that has been a big trend for them. Now, their rival LG Electronics also said that its flat panels business did well this year.
Well, thanks, Charlene. But it's the very last week of 2017, and we at Bloomberg Quint look at stocks that have clocked stellar returns this year on our special series Multi-Baggers of 2017. Today, we feature Venky's India. So what is up with the company and what's really been working in its favor? Well, we have Yatin Mota joining us back to give us details in this report.
If you look at Venky's India, that stock delivered a return of nearly 7 times. And clearly that is one multi-bagger we will be focusing on, and starting with the key metric or the return ratios, how really it's shaped up. If you look at the return on assets, return on equity and return on capital, probably you have seen a very strong improvement in the entire financial year 17, and in fact the return on equity for the company is now close to 26.3%. If you look at the FY19 price to earnings ratio, that is close to 22 times, probably something like a premium FMCG company in terms of demand of valuation that usually we see. Coming to the next slide, and if you look at the overall performance for the company on the balance sheet front, really the debt, which was probably at a peak level in FY15, has gradually come down to level of 300 crores. So not only the return ratio and the profitability of the company improved, but also we have seen substantial improvement for the debt levels for Venky's India. Now, if you look at the key revenue metric, how really the company does in terms of revenue composition, we have nearly 50% of their revenues coming in from the poultry and poultry product business, and the remainder, roughly 53% comes in from the animal health as well as the oilseed segment. So equally big, if you could say, the animal health business of the company. And if you look at the margins also for the animal health business, that is really the one which is driving the overall profitability. Margins for the company stood at 20% for this particular segment. Of course, poultry business and the oilseed segment continue to deliver stable set of margins for the company. Of course, if you look at the financials and look at how the growth really has shaped up for the company, they have done a profit after tax of nearly 80 crores for the first half of this financial year, which was almost equivalent to the FY17 profitability. So significant improvement coming in the first 6 months of this financial year for Venky's, and probably that explains really how and why the share prices have moved up for the company, and significant amount of margin improvement, nearly 200 basis points coming in for Venky's as far as the first half of this financial year's performance is concerned. Of course, this chart really shows you how the egg prices have really moved. Probably that is a benchmark as to how really the revenues of the company are expected to grow. So from a level of 338 rupees, for 100 eggs, it has moved close to 400 rupees now, stable from the peak of close to 500 rupees because of the seasonality factor. And finally, we have what's really working for the company. What are the key risks? Of course, sharp rising poultry prices, better realizations, satisfactory demand supply situation, especially after the beef ban that we saw, is something which is working in favor of the company. Also, high utilization is something that has seen improvement for the company. Raw material prices also have declined steadily for a company like Venky's, and that explains you the reason why the margins really expanded for the company. And finally, we will talk about the risks, and that is the final slide. Events-based risks like bird flu and decline in the chicken and egg prices is something that would see some pressure moving forward. And these are the key risks that the company is exposed to. But overall, on a net basis, as I was mentioning earlier, 7 times is what the share price of Venky's moved for this calendar year 2017.
Of course, Bloomberg Quint will continue to bring you more multi-baggers of 2017 as we head into the new year. But moving on, Vijay Rupani has taken oath as Gujarat Chief Minister for the second consecutive term today. And Rupani and his entire cabinet, including Nitin Patel, who stays as Deputy Chief Minister, were sworn in Gandhinagar amid much fanfare. A whole host of leaders from the BJP, including the Prime Minister Narendra Modi, Party President Amit Shah, and all the Chief Ministers of the NDA rule states attended the ceremony. This was the party's 6th straight win in assembly elections. With 99 MLAs, the BJP has a simple majority in the 182-member assembly, 16 less than its 2012 tally of 115. But famous Tamil movie actor Rajnikant said that he will announce his stand-in political entry on New Year's Eve. Addressing his fans on the opening day of the 6-day-long interaction with his fans in Chennai, Rajnikant said he would have entered active politics long ago if he did not know the dynamics of politics. He also said that he had made his entry into politics in 1996 itself when he campaigned against late Jayalalitha in assembly elections. While Rajnikant is credited for overthrowing Jayalalitha's government in 1996, his call to vote against the PMK backfired in 2004 when PMK won all 6 parliamentary constituencies. And Rajnikant is scheduled to meet fans from 18 districts over the next 6 days before making an announcement. And finally, moving on to Bitcoin, which continues its topsy-turvy ride in the world's biggest and the best-known cryptocurrency, recovered from Friday's fall and is trading with gains of over 10% today. And the digital currency has risen around 20-fold since the start of the year, climbing from less than $1,000 to as high as nearly $20,000 in December. Now 17 on the Bitstamp and took over $20,000 on other exchanges, I beg your pardon. But it has also posted heavy declines since, while Bitcoin investors and analysts believe that the decline in its value was a natural correction after a heady run-up in the prices, there have been further warnings from the market regulators and central banks. But with that, it's a wrap on this edition of all you need, what you miss. I hope that we've helped you catch up with all that went throughout the day, and of course, there's lots more lined up. So keep watching Bloomberg.
Are we live?
Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive.